Which ones in Group A are profitable? Let's check it out. Hello my friends, this is Legend. I wanted to go through the Group A ETFs and see if any of these are profitable and if they're making money or losing money over time here. So we'll take a look at TSLY, CRSH, GUI, YBIT, OARC, ZOMO or XOMO, SNOWY, TSMY, and we'll also take a look at FEAT and FIVY to see how well they're doing, but they have not paid out a dividend yet. And we'll also cover YMAX and YMAG as they pay out every week. So let's jump over to the Morningstar chart and get started. So here we are on the Morningstar chart. We're going to look at the full chart of each one of these. It will be from inception up until present. This is all for Group A. So we'll start off with YMAX. The YMAX, it's down 11.9% on the price. And when you add that dividend back on, you're up 28.8%. So this one here, it is moving up with the dividend added back on, but the price itself is dropping. This is from January of 2024 up until present time. For YMAG, it is from January 2024 as well up until present. And this one here, price-wise, is pretty flat. It's up 3.5%. And then tack on the dividend, you're up 44% on this one. This one looks a little bit better than YMAX. I am in YMAX and not YMAG, but I was looking for an ETF that covered everything. So that's the reason I got into YMAX. Now it is a little bit down more than YMAG. YMAG actually being up presently. So if you're in YMAG, you should be all right so far. For TSLY, this is from November of 2022 up till present. And it looks like for TSLY, it is down 60% in price. And add the dividend back on, you're up 45%. I am not in TSLY, but I don't really like that price dropping that much. 60% in a price drop is not going in the right direction for me. CRSH. For CRSH, we're looking at May of 2024 to present. So this one has not been out that long, about 7 months. But it's down 70% just in the price and down 56% when you add the dividend back on. So currently for me, CRSH is a pass. I would not want to be in this one currently as it seems to be continually to drop and I would be losing money in this one. For GUI here, for the price alone, we're looking at from July 2023 to present, and that is down 22.8% in price. And tack the dividend back on and you're up 11%. So for this one here, honestly, the price is on a downcline. And when you add the dividend back on, you're up a little bit, but almost break even here. And for GUI and a higher risk ETF, it would not be paying enough for me to invest into this one. YBIT, this one is from April 2024 to present. So this one has been out for about 8 months, and it is down 28% on the price, and the dividend added back on, you're up 12.6%. So this one here, again, if I'm just drawing a trend line, it's got a downward trend to it on the price. When you draw a line for that distribution there, you're only up 12.6%. Now this one has not been out as long. It's only been out 8 months, but still for this one, I would like to see this one turn around before I would get into this one personally. But the YBIT is a pass for me just due to the price decline. For OARC here, we've got a decline in price of 46.3%. And when you add the dividend back on, you're up 20%. But as I said on the last ones, with that price decline from about $20 $1.72 down to $11.11. And this has been out since November of 2022. So this one here, with that decline, that downward slope in the price, is not something I would be looking forward to. And then when you add the dividend back on, well, it's just about a break even, honestly. A 20% up, but over the time period here, it just popped up from this point here around about October 31st, and then it popped up to here. So with this increase, that's what gave it that 20%, because if you take it from this point in October, the close was 20.76, and it opened here, or not opened, but closed on this day at 20.72. So that's a long time for a break even, right? And now you did have this pop up here, but for this amount of time, this one here is a pass for me. The price itself is a decline, and the distribution is pretty much break even. So your distribution is only covering the price drop itself. So that's not really what I'm looking for in these ETFs. ZOMO or XOMO, it is down 26.2% with just the price, and the dividend takes it to only down 3.8%. And this one has been out since August of 2023. So this one's been out for a little over a year. And that price, again, that price decline. That's a downward slope on that price. Not something I would be looking for. Then when you add that dividend back on, you're just about at a break even here. So again, not what I would be looking for in a high yield, high risk strategy play for an ETF here. You'd probably be much better just going with the Exxon Mobil stock itself. Snowy came out in June 2024. It does have a little bit more of a flat on the price. It did drop, but then it did come back up, and now we're about where we've opened. Down just a little bit. It is down about 9%. And then you add that dividend, and you're up 21%. So this one being out for about 6 months, and you're going from close of 2108 to 1917 in just the price, and 2558 when you add the dividend back in on top of that. For me, this one here is pretty flat. The price is flat. You add the dividend back on, you are up a little bit, and it is somewhat new. So this one here, it could be profitable if it continues. If that price can stay flat to up and the dividend can keep increasing, then this one here could turn around and actually be a pretty good play. So this one here is so far one of the better ones, I guess. Let's look at TSMY. TSMY here, it's a lot like the one we just looked at, but might be a little bit better shape. It's been out since August, so not a whole lot of data here to go off of, but it's been out since August 2024. It came out at about that 2025 price, and it's sitting at 2031 price now. So this one here is pretty flat. As you can see, it's up 0.2% in the price alone, and up 9.8% in the price plus dividend. So this one here is so far profitable. And as always, I always like to, show what the poster child would be for these ETFs. And I always go back to my favorite, and that's MSTY. And MSTY here, for me, is what you would be looking for, right? It's got a start price or closed in February of $25.16, and current price is $30.16. This came out in February of 2024. So it has only been out for about 10 months, but the price is up 19%. So that's a good start right there. You always want the price to go up or at least stay flat. If it's going to give a really good dividend, then you want that price to stay flat or go up. Prefer to go up, but as long as it stays flat and not erode and go down, that's what you're looking for. Because getting these distributions, most of the time, it is about getting cash flow. And getting that cash flow coming into your account allows you to do other things with that money. But if you're just trading the distribution for the price or the price for the distribution, then it doesn't make sense to do that. You would be better off just taking the full amount and doing something else with that money rather than them just paying you your money back in a distribution. You're not really gaining much. You're just breaking even. So again, MSTY here, we got a 19% up in just the price. And when you add that dividend back on, you're up 197%. That's the kind of ETF that I'm looking for. I'm looking for something that at least the price can stay flat to up and that dividend to continue to rise. And that's exactly what it's been doing. And of course, MSTY is not in Group A. I just like to use MSTY as an example of what I'm looking for. But out of all the ones in Group A, looks like the best is TSMY. Looks like that one out of Group A, to me, is at least heading in the right direction. But if you want to tack on the weekly ones, YMAX and YMAG, then I would have to say YMAG would be better than YMAX for those. But I still see YMAX as being possibly okay. I don't like the fact that it is down 12%. The dividend is increasing, but the price itself needs to flatten out and start going back up so that it does not continue to go on down. So in summary, really Group A, I'm not seeing really too much there that interests me. We'll see how the fiat and the FIVI goes just to see if they will actually be profitable. But let's take a quick look at those two just to see on the chart to see where they're going and are they heading in the right direction. Okay, so here we are on the Webull chart. As you can see, the fiat here, it looks like it opened around about the $50 range, and we are sitting at 47.29. So far this one has been going down, but the market has also been in a decline slightly. So there's been a lot of red here lately, which could be affecting the fiat and FIVI as well. But so far this one here is on a slight decline. And it looks like FIVI looks about to be the same. About the same price, came out about the same price, around about the $50. They're both sitting at about 47. So currently these two are down. They have another 4 weeks though before they will pay out a dividend, and we will see how that first dividend comes out and how the stock looks at that point. So I think I'm going to wrap it up right there. Don't forget to like, subscribe, and share, and hit the notification bell to get notified of all the new videos. So as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, legend out.